Welcome to the SpreadX Weekly Financial Market Preview. Again, I'm joined by analyst Connor Campbell. So when we're looking at the macro outlook, there's quite an effect on FX trading possibly this week.
No, that's probably going to be the focus this week. First off, we've got cable, the pound dollar. That's had a sort of ludicrous 7 days really. I think this time last week it was trading at post-Brexit highs, so that's almost 2.5-year highs against the dollar. Crossed 1.435. Off of sort of some decent data and some hawkish hopes, and the assumption that the Bank of England was going to raise rates in May. Since then, however, it's sort of all gone wrong for the pound. You had decent but disappointing wage growth figures, you had a disappointing inflation figure and disappointing retail sales figures, which had knocked the pound, but it was coping okay with it. Then sort of Mark Carney waded in, was far more dovish than people were expecting, has thrown doubt on the potential for a May rate hike, and then the pound's sort of completely lost it. And I think it's now at a 5-week close, trading back below 1.395, which is quite a shift in the space of a week. In terms of what's going to move it this week, the focus is really on Friday, because you've got the first glimpse at both the US and UK GDP figures. Neither are particularly going to be great. I think the UK figure is expected to fall from 0.4% in the fourth quarter of last year to between 0.2 and 0.3% in the first quarter. US, meanwhile, I think it's expected to fall from 2.9% at an annualized rate in the fourth quarter to 2% in the first quarter for 2018. So it really depends on what investors choose to focus on, because neither of those are particularly great figures. The key decider could be Mark Carney again. Mark Carney is expected to speak on Friday. Whether he goes into the details of Bank of England policy like he did last week, I'm not quite sure. But if he does, I think that will sort of clinch it for how the week ends and which side the week falls on in terms of the pound or the dollar. Yeah. In terms of our clients, they've been buying since the pound fell back below 1.40. I think they've seen quite a sharp pullback in the last week or so, and they're looking for some kind of bounce as the week continues.
And how about euro-dollar?
Euro-dollar, the main focus is on Thursday. It's the ECB meeting. Last ECB meeting, sort of the euro. Back in March, the euro got a bit excited because the ECB had changed the wording very slightly about their asset purchase program. The very slight change seemed to suggest some kind of very gradual hawkish move in the future. But then the Draghi and then the meeting minutes from that from March sort of dispelled that quite adamantly. The Bank of England, the central bank, was very keen to point out that this wasn't any hawkish shift at all. It was just a very slight change in wording. I think that's left the euro. I think its worst level since the start of March against the dollar. It's going to be interesting to see whether Draghi can drive the euro any lower on Thursday, because it's done so poorly in recent weeks. But I think he is expected to be sort of typical dovish self, and that is why perhaps our clients are still selling the euro despite it falling to its worst price in coming up to 2 months.
And looking at stocks, so we're going to look at some stocks announcing this week. First up, Whitbread.
Yeah, Whitbread, the owner of Costa Coffee and Premier Inn. The main focus at the moment is on Costa Coffee. It's sort of seen a very sharp jump recently. That's because Elliott Advisors, which is sort of activist investor, a US hedge fund, they've helped force through the Melrose takeover of GKN. They announced that they've got a 6% stake in the company now. They're the largest shareholder. They're clearly trying to force through a separation of Costa Coffee from the rest of the business, which has sort of long been speculated and looks like it could actually come to a head this year, especially given that I think it's Sasham Head. They're another US hedge fund. They have 3.4% stake in the company. Again, they want to separate Costa Coffee and Premier Inn, which really puts Costa Coffee's figures sort of under the spotlight this week. I think last time out in its third quarter, I think total sales for the quarter were up 6.9%, which was decent, but down on the 8.3% for the year to date. Like-for-like sales, on the other hand, were down 0.1% for the quarter, which isn't great for a business that you're looking to spin off specifically. As for Premier Inn, I think total sales for the quarter were up 4.7%, which is strong, but you can see there's a sort of discrepancy between Costa Coffee and Premier Inn that might suggest why investors would like the two to separate, and for Costa Coffee to sort of be freed from Premier Inn and sort of be able to fly its flag a bit stronger. In terms of its full year figures on Wednesday, I think the real focus is going to be the fourth quarter from Costa Coffee, whether it dipped into the negative territory in terms of like-for-like sales once again. If it can avoid that, then the company might be able to hold on to the gains it saw after the advisor's stake was revealed. Also, I think pre-tax profit is expected to rise around 3% to 583 million, which again, that's a decent headline figure for investors to cling on to. From our client's perspective, it's difficult to call around that £42 level because it has shot up around 10% since the advisor stake was revealed. So it does leave, there's a big old gap there that could be filled if it pulls lower. But the prospect of that pre-tax profit rise does seem to have investors buying, customers buying, around the £42 mark.
Okay, and Boohoo?
Boohoo, yeah, is at a really, really awful time of it. I think it really struggled in 2017. That's continued in 2018. I think it's down 14-15% now. And the main issue is margins, because its headline figures are fantastic. I think it was its half-year figures earlier in last September. I think revenue more than doubled to £260 million. Pre-tax profit was up 40% to 20.3 million. Really, really strong numbers. However, there was a 200 basis points drop in its gross margin. That really put investors off of what is a fairly expensive stock for an AIM stock. And that sent the stock down 17% in a single session. Ditto then in January, its most recent update. Once again, I think for the 4 months to December, revenue had doubled. It was up 100%. I think it upgraded its full-year revenue target, to 90%. But again, a fall in gross margins took the stock down and leaving it. I think it was at 5 month lows at the start of April. However, that has sort of given our clients are really, really aggressively buying the stock since it fell to those lows. I think Boohoo is the kind of company that posts such big numbers that if investors, decide to get back on board and decide to be a bit more receptive to those kinds of triple-digit revenue growth, and if the company can post, I think the company is expected to post 90% revenue growth. If it can get that towards 100%, then investors might be willing to get back on board at its current April lows.
Okay, and finally, Facebook.
Yeah, Facebook in the news constantly at the moment for not very good reasons. Interestingly, 2017 also saw the stock blighted by bad political press, basically, and it didn't really affect its market performance at all. I think it was still up 52% on the year. However, this year, since the Cambridge Analytica sort of scandal come out earlier in the year, that did actually knock the stock lower. I think the big question heading into its third quarter figures on Wednesday evening will be how much investors are going to focus on that political scandal and what ramifications it could have down the line versus what are likely to be some pretty strong figures. I think for the third quarter, Facebook's expected to see ad revenue up 30%. Monthly active users is expected to jump, I think, 13.4% to 2.196 billion users, which is a colossal amount of people. Even if it did, I think, in the last quarter, maybe 1 million US users. It saw 1 million drop in US users quarter on quarter. But if you've got nearly 2.2 billion users, you can sort of swallow that very slight decline. I will say our clients, they're buying around the 170 mark since it fell towards that level. I will say there are still sellers. This is nothing like Boohoo where it's all one-way traffic. There are sellers around the 170 mark with Facebook, but broadly our customers are looking for it to bounce after its third quarter figures on Wednesday evening.
Great stuff, very interesting. Thanks very much. That's all for now.